All right, I welcome you guys to another wonderful video, another wonderful session of this particular training. And in this video, we are going to be talking about entries, right, using this strategy. So now, without further ado, let's just dive into what we have for this particular video. So now, what are entries, right? Or what is an entry? So now, this will bring me to talking about this important concept that I literally developed, right? So I call it the template for successful technical analysis strategy. Let me call it successful success now. Sorry if I'm not spelling successful properly. Successful, right? Successful TA template. Successful technical analysis strategy template, right? Every successful technical analysis strategy has this template, right? So what is it? What's the first thing, right? They have a trend highlighting checklist. They have a trend highlighting checklist strategy. They have a POI selection strategy, right? They have a entry strategy. Sorry, let me just rewrite that. They have a entry strategy. They have a exit strategy. Right, right. They have a exit strategy, guys. So this is what every successful analysis strategy that is complete literally have, right? Sorry about that. I was literally talking shenanigan then. So yeah. So now don't worry, when we start putting it all together, you understand this properly. So now we are currently at the entry stage, right, of things. Everything I've been teaching you guys so far, oh shit. Everything I've been teaching you guys so far, you know, is revolving around this template. And don't worry, we'll still get to the putting it all together section whereby we'll get to pack all this and put it all together, right? So now we are currently at the entry phase, which is how you literally enter into a trade. What is the strategy for you to enter into this trade? So the first thing is you use your POI selection strategy, which is looking for an overall pattern. Then you now look for a pattern within the pattern. Remember we said at the third touch, right? Remember the concept, first touch form, then the last rider form before the second touch want to form must be broken upward now for a bearish, pattern to literally for us to say that a bearish pattern has formed. So after that has formed, you look for another bearish pattern on a second dimension perspective or medium noise time frame, right? After you see that bearish pattern form, it can either be a ascending channel or bearish wedge or a bearish expanding triangle, right? Then you wait for it to break. So after it break, you anticipate that the price continues downward, and that will literally be your entry. That will be your entry. Like you enter at the break of a pattern, of that smaller pattern you see on your second dimension time frame, and then after entering there, you set your stop loss above the pattern I, then anticipating that at the third touch, price will finally break and continue going lower, targeting the low of the overall pattern, right? So that's literally how you enter trades. Remember, don't go to a third dimension perspective time frame to look for your entry pattern, right? So in this case now, we are anticipating bearishness. This is a bearish overall pattern, that we are looking at. So on the second dimension perspective time frame, which is a medium noise time frame, we are going to look for another pattern again, which is also a bearish pattern, telling us that price will reverse downward. So now the case is different for the bullish case, right? It's going to be, after using the overall pattern, you are going to look for another same bullish pattern, right? That is going to tell you that, okay, our price is now going upward. And at the break of a bullish pattern, at the third touch point, remember, third touch, after the first and second touch has formed, when you are anticipating third touch, that's when you go to your second dimension perspective time frame to look for your entry pattern. Don't forget that. It's very, very important. The first touch must have formed first, second touch must have formed. It is at the anticipation of the third touch, which is the break, that you go when you start seeing the after you have seen that okay, yeah, price have broken this, the last side that formed at the first touch by the second touch that's literally broken it, then that's when you can now start anticipating entry pattern. So now let's go into the real life chart and let's look at how this must have literally looked like. So now, for example, I don't know why I've been using this since, right? So, for example, let's take a look at this point, or let me just quickly look for a setup. That might it might literally take time, but let me just quickly look for a setup. Let me play price. Okay, let me just quickly look for a setup and let me show us as an example. Schwartz. All right, I'm not really getting a setup now. I want to look for a typical pattern that I know that okay, yes, this thing is nice. All right, so I think I just got one. I'm looking at this pattern, but this is its first dimension perspective. So I cannot even see the pattern within it, right? But I can one thing I know is that I can see the first touch, which is this, the second touch, which is this, and it has literally broken this where the coins, and it's a bearish pattern, right? So I'm just going to add on to 5 minute time frame and let's see what happens. So this pattern now, I'm anticipating that price breaks this low, right? That's what I'm anticipating. Anticipating that price break this low. So we have seen our first touch, right? We have literally seen our first touch. This is the first touch. We have literally seen our second touch. So now we're anticipating the third touch. And as you can see, I'm not just anticipating on the scale of just anticipating sake. This eye last side I formed after this low form, this our first touch formed. The second touch point, I've literally gone ahead and break it with price over here. It has created a eye like this eye that is higher than it. So I'm literally anticipating a you know a what are they calling it now? A breakout at the third touch. So now, whenever you want to look for your entry pattern, right, you must make sure that you are looking for it at the corrective phase of the market, not impulse. So as you can see now, this market point now is impulsive. So we can see that we had just little retracement candle. Everything is not properly distributed, but we had more bigger candles. So I'm not really looking at it, right? Some people might want to say that yes, this is a pattern. Come on, come on. That's It's too impulsive. Most of the time, you might literally find yourself getting into trouble trying to do that. So, and the question you need to ask yourself is that are we on the second dimension perspective? For you to be able to look for your entry. So now look at the overall pattern. Look at it. Can you see the pattern within the pattern? Yes, I can see this pattern within this pattern. So although it's not our entry pattern now, right? So but it's just a pattern that is telling us that okay, yes, since you can see the pattern within the pattern, but you cannot see the pattern within the pattern of this pattern. I cannot see any other pattern inside this pattern that is inside the overall pattern. So it's a second dimension perspective and not a third dimension. So but this time frame, I'm not really getting much of the second dimension perspective here. Let me just enter into the 3 minutes. I think yeah, the 3 minutes is now very, very cool. I can see patterns, right? I can see patterns within the pattern, right, properly, and I cannot see pattern within the pattern of the pattern. So now let's just see how the market treats us. Let's see how the market treats us. Let's see if we'll get the entry pattern. And let me just give an example. Let me change these settings to 3 minutes. Okay, I think I'm getting a pattern. Okay, this is looking like a continuation pattern. Remember the continuation pattern I taught you guys, which is a bullish flag or bearish flag. In this case now we're having a bearish flag. Price was already coming down before, so and then this pattern just suddenly formed, right? The bearish flag is marked by two equal lows or equal highs forming. Then you can just start drawing it out from there, right? So and at the break of the pattern, we're anticipating that it continue going downward. So now the pattern already broke, as we can see over here. Let me just try zooming it in a little bit. So the pattern we already have a break of the pattern over here. Price broke it downward. right? So this is the first low and this is the second low. They are equal. So that was where I marked out my where are they calling it from. So I'm literally entering on this, right? Setting my stop loss at the high of the pattern and targeting the low. Let me see if I can place an order on this and let's see how market treats us. Okay. It's just going to be a very weird thing. Let me just save this and let's see how price treats us, right? So this is just example case, right? For example scenario. I hope we don't get stopped out. Okay, we get stopped out, but we got stopped out on that. So, but I can currently see another entry pattern, which is this guy, right? We are not currently running a back testing session, right? So, but for example's sake, so this entry pattern is here. We are still anticipating a third touch, right? So let's just see if price breaks it. Price haven't break it. Yeah, price break it over here. So let's try to enter and let's see how the market treats us. Although the concept is not complete without trade management, guys. So trade management is also part of the training, and we are coming to that, right? We are coming to trade management soon, right? So this is how you can literally pick trades, and even though if it not later end up smashing your TP, it still end up as a profitable trade, guys. So oh come on, that was huge. So this was a very fast. It was a very fast move. It would have been a break-even trade for me right there, right? So it broke it downward, then it came back, stopped us out at break-even, guys. So yeah, you can literally still look for other entry patterns, right? So other entry patterns. I think I shouldn't have even tried to look for a setup because it will prolong the video, right? It will prolong the video, right? Which I don't want to do, right? So but I don't know if you guys get the concept already. You guys should have been able to get the concept already like that. So you look for a pattern. Let's see how okay. It's also another loss. I think this setup is not it's not it. It's not it at all. It's not it at all. All right. Let me just give an example from an already existing setup so as not to prolong things, right? So let's come back to this our setup that we have been using before, which is this guy over here. So now we have price do this, right? We have this pattern, this beautiful pattern from which is an expanding channel, an expanding triangle. And then now you have to all you just have to do now is to go to the smaller perspective, which is the second dimension perspective. We are currently on the 15 minutes. We can head on to the 5 minute time frame. And on the 5 minute time frame, we can literally see that we are on our second dimension perspective, whereby we can get to see the pattern within the pattern, right? So and this is a very nice pattern to start with. It's a very nice pattern to start with, which later came back to stop us at that break even. That's one. So, but here is also another pattern that we could have entered from after the break, and this is an expanding triangle now. So at the break of this pattern over here, you could have decided that you want to enter for a sell, setting your stop loss at the high and targeting the low of the overall pattern, and that would have been a very nice entry. Now let's just look for one more setup and then we call this video, we call it a day for this particular session, right? So it's just kind of like very stressful when you are not doing a backtesting session and you want to at least show examples of setup, right? So let's see how this guy work out. Let's see how this guy works out for us. Let me increase the speed a little bit more. Let's say 10 minutes. Okay. Oh my god, I've missed it. Oh, I've missed it. So let's say we are looking at this expanding triangle now, for example. So 15 minutes, let's go back to the 5 minute time frame. These our touches have changed now, for example. It have literally changed and it's totally normal. There are times whereby you have losses. losses is not, it's not something that you can shy away from in trading. So first touch, second touch, we're anticipating third touch, and then we got this beautiful pattern, which is now the one that is dropping now. You can see price already broke, the high, or that formed after the first touch over here, and then the second touch already broke it out. So we now have a valid setup. So now you can see we had this corrective phase in the market, nothing really impulsive. Price was distributing properly, even though this side is that almost look impulsive, is not really that impulsive, because most of it now, there's also the 80/20% rule. If it is 80% corrective and 20% impulsive, if the pattern is 80% corrective, 20% impulsive, it is still corrective, right? So now the pattern got broken over here, and as it got broken, we could have said that we want to enter for a trade at the break of the pattern, setting our stop loss at the high of the pattern, and targeting the low of the overall pattern. So, and let's see how it finally come on. What a very weird pair, absolutely, or a very weird setup. But yeah, it's coming all the way back downward. Up to this point that it is running a profit, I would have literally take some partial profits, guys. So real trading is not always smooth, right? So, and that's why we have trade management too, right? So let's just see how price runs. But you can see we were running in profit even as it was doing its madness and crazy stuff, right? So yeah, that's the concept, guys. That's the concept. Look for entry pattern getting. I wish I had a better example for this. Okay, let's still watch it play. Let's still watch it play. Let's still watch it play. All right, finally moving close to our target point, but still acting like a crazy guy. All right, market can be very stubborn sometimes, right? So look at how long it took before it's finally saying that it wants to get straight to our TP, right? And by the way, you guys should not forget this strategy has 60%, 60 to 70% win rate, right? So it's not a strategy you should trivialize. It has been tested and trusted. I developed this strategy, right? So let's just see. And finally, TP TP was 8. You can see from stressing us all through this point up to getting to our TP. And that's all for this particular video. And that's how you make use of your entry. Always remember the diagram. Where is even the diagram? Always remember the diagram, right? So at the anticipation of the third touch, you expect your entry pattern to form, and your entry pattern should always be a corrective. You should always look for it in a corrective phase, not impulsive. If it's impulsive, ignore it. If it is corrective, yeah, you can look at it. And that's all for this particular video. I'll be looking forward to see you guys in the next.